Hello and welcome. In this last video of the series Price Action Trading for Beginners, I will share with you the things that I have observed in the market. Okay? Now, this is the chart of Bajaj Finance and this is a day chart. I have cut it here and let us assume that the price is right now here. Okay. Now the first thing that you have to recognize is the recent swing high and swing low. So this is recent swing high, this is recent swing low, and I want you to mark it. You have different tools to mark it, but the one that I use is price range. So I'll select from here till here, and I can see that it is a total of 1640 points or rupees. Okay. Now what we have to do is mark 50% of this range, mark 50% of this range, and mark 75% of this range. Okay. So this is the range now 1640. We have to mark the 50% of this range and 75% of this range. Alright. How you do it? It is left to you. I'll use a calculator and calculate and mark the values. Okay. Alright. So I have marked the 50% of this range here and I have marked the 75 here. Now why did I mark 75 here and not here? This is because the price is moving up. Okay, the price is moving up, and so I have considered this as 75. If the price was coming down, okay, I would have considered somewhere here as 75. Alright. Now, my observation is that if the price crosses the 50% mark, then it will move up till 75% and then it will turn back and start moving down. This is what I have noticed. Okay, this is not a rule of supply and demand trading. This is my observation. How will you use this observation? It is entirely left to you. I am just sharing with you the things that I have noticed. So let me replay it or play it and see what happens. Now the price is moving up and here it has crossed the 50% mark. Okay. If it crosses 50% mark, then the chances of the price moving till 75% and returning are more. Now it is not that it has to return from 75. It may go up till the supply zone and it may come back, or it may break the supply zone and move up too. Okay. But what I have noticed in many charts or many stocks is that the price goes up till 75% and comes down, or if the price is coming down, the price will come down till the 75% and start moving up. Okay. So let me play the price and you can see the price is near the 75% mark now. Yes, and you can see the price touched the 75% line and it started moving down. This is something that I have noticed, and although I cannot explain you why this is happening, you can use this information as you want it. Okay, so I observed it while marking the Fibonacci levels. All right, so this is one thing. Next, let us say that you have marked a zone like this. Okay, you have marked a zone like this. what you have to notice is how the price moves away from this zone. If you see here, the price is moving very strongly by making big green candles. Okay, this means that this zone is very strong, or the buyers here are very strong, or there are a lot of pending orders here. Okay, if the price moved up in a weak way, meaning not so big candles, okay, and it took up many candles to move up, then it would mean that the buyers here are not strong. This information will be useful when the price returns back to this zone once again. If the price had left the zone in a strong way, then the chances of price going back again from the zone when it reaches here is more. Okay, if the up move was weak, then the chances of price moving up once again when it reaches here is less. All right, the same goes for supply zone 2. How is it moving up and how is it coming down? If it comes down very strongly, big red candles, then the chances of price reacting here and moving down is more. Okay, so you have to observe everything in the market. How is the price going up to a level? How long is it staying there? And how is it moving down? When you start observing things, you will be able to understand the market. And when you are in a position to do that, you will be able to take better trades. Okay. Next, let us say that you have marked a zone like this, and this is your zone. All right. Now this here would be your stop loss if at all the price comes to this level and you take an entry. Okay. How do you take an entry? You can take an entry by placing a limit order here, or you can place or you can enter a trade by looking at some candlestick pattern. Alright, there are various ways of entries which are available freely on the internet. You can follow any one. Okay, you can place a limit order here and enter. But then the problem here is, if you enter here, this would be your stop loss. Okay, and you can see the stop loss is very huge here, because if you take an entry here, you would be exiting it, you would be exiting from it when the price nears the demand zone. Okay, a minimum of 1:2 risk reward ratio is necessary. All right, so here, since the stop loss is huge, this would be a risky trade, and so what you can do is you can enter a trade if the price moves above this level and is somewhere here. When the price reaches somewhere here, you can enter the trade by keeping a small stop loss. Okay, stop loss can be this level or slightly above it. All right, hoping that the price will go down. So remember that if the stop loss is big, then it is risky to enter the trade. Okay, next, price is moving up, it is consolidating and it is coming down here in this case. But if you notice, price stayed too long in this zone. 1, 2, 3, 4, 5 candles were formed when the price was in this zone. And if you look at the 6th candle, it has touched the zone here, meaning 6 candles were in contact with the zone, meaning many pending orders were getting executed here. and when this happens, the strength of the zone becomes weak. If a lot of pending orders get executed, then if once again the price moves up and if you take an entry, the chances of price coming down are very less, because most of the pending orders are executed here. Okay, so there are less for execution when the price comes up once again. So a better setup would be this: price goes up and it stays only for a short duration and then it comes down. So here it was there for only 1 and 2 candles. So pending orders are much more here when compared with this. So if the price comes up once again here, the chances of price coming down is more. Okay, so I hope you have understood. Next is, whatever I have taught is the theory part. Whatever you will observe in the market is reality. Okay, you know how the rally candles should look like, and if we go by the rules, this is not considered as a rally candle, this is a base candle, correct? But then we consider this to be a rally candle because the price has gone up. This is a very good rally candle. The price reached till here in this session, and if you see this, the price has gone till here, even though this looks like a base candle. What we want is the price moving up by a huge amount, and which has happened here. Okay, here also, even though there are wicks, the price has gone up. So we consider all these to be rally candles, and we have bases here, and then we have drop candles. This is a drop candle because the price has come down. This is a good drop candle, and this is also considered to be a drop candle, even though it looks like a base candle, because the price has come down by a significant amount from this level or the previous closing. Okay, so since the price has come down, we consider this to be a drop candle. Now this is not a drop candle, this is a red candle, but it is not a drop candle because it is in the range of the previous candle, correct? It is consolidating here. So since it is in the range of this candle, this is not considered to be a drop candle, whereas we consider this as a drop candle. Alright? Yes. So these are the things that I wanted to tell, mainly being the 50% and 75% levels. So if the 50% level is broken, then the price most of the time goes till the 75% mark and comes down. Okay, if the 50% level doesn't break, then there is no rule, nothing will happen and the trade continues as usual. Okay, now if you want to sustain in market, risk management is crucial. I have made a video about risk management in the series of candlestick patterns, which is on my YouTube channel. If you haven't looked at it, please look at it and follow the things that I have explained there, because for anyone to stay in the market, risk management is very, very important. You cannot put all the money that you have in a single trade hoping that it will go in the direction that you have predicted. Okay, that is not how market works. So that's it for this video series. I have shared with you the things that I have observed in the market. I hope it was useful. I'll see you in a different video series. Till then, take care and thank you for watching.